Hello everyone, welcome to the channel of Tradeometry. So what is going on today? Why is the market down? And my account is up a lot. So what is happening today? So if you are in my Discord channel, you should know why. This morning, 9 a.m. in the morning, I told all the members that the general strategy for today is to low the puts. The objective is to position for tomorrow. So actually, looks like it happened much sooner than I anticipated, but that's okay. I'll take that win. Due to the massive dark pool prints and technical breakdown, the bearish thesis is very much intact. Bounce today is the perfect entry for your puts. The objective is not to make money today, but to position for tomorrow, which I believe is the actual big move down. So why? From the fundamental side, the Micron technology earning, I believe, could dump the entire semiconductor sector. Micron technology is up over 200% year to date, has priced in all the optimism in the near term. A correction is overdue. And another factor is the CPI data tomorrow, even though they could come in line with expectation, which is around 3%, but it's still far above 2% target. This will delay rate cut expectation, and I believe this will put more pressure on the market. If you remember from the last Fed meeting, which is last week, Jerome Powell just signaled they stopped the quantitative tightening and they have started to purchase short-term treasury bills to support the short-term liquidity in the market. So why are they doing that? So this was not widely expected by the market. And very oddly, Jerome Powell said he was concerned about the labor market. He said the average monthly job was about negative 20,000 jobs. Yet he said he suggests the next FOMC, the Fed will stop lowering the rates. So that seems to be very odd. It's very contradictory. While you know the labor market is weak, why would you stop cutting the rates, right? You need to continue to cut rates to support the labor market. Why do they stop cutting rates if the labor market is so bad? It's minus 20,000 jobs per month on the previous 6 months. Basically, we're losing jobs month over month, and we're not seeing any progress. And the non-farm payroll just released yesterday. It showed negative 100,000 jobs in October and plus 64,000 jobs in November, I believe. That October print is quite bad. It's in the recession territory. I believe that was the worst since 2020 COVID crisis. Um, this is really, really bad. And Fed, even though they are concerned, but they are not going to cut rate in the January meeting. Why is that? I think the Fed is trying to signal to the market that they don't want to have the market to be overly optimistic about the rate cut. So they front running the rate cut and trying to bid up the asset price. The inflation would get out of control. I think Jerome Powell only said that to calm down sentiment regarding to the stock market, and everybody just calm down a little bit and the inflation will calm down, and then maybe we do get a January cut. Jerome Powell's strategy is to calm down the market to give a low expectation, and then maybe we do get a cut, and then if the labor market does get worse, of course, he will continue to cut rates. But something came out today. Um, Blue Owl Capital. Blue Owl Capital is a private lender. So it's from the Financial Times. They're saying Blue Owl has walked away from funding Oracle planned 10 billion, 1 gigawatt Michigan data center for OpenAI after talks stalled, leaving the project's financing in limbo as lenders push tougher terms amid concern over Oracle's rising AI data center spend and 100 billion plus net debt. Why is this very significant and damaging? Not only for Oracle, but also for all the neoclouds that require additional debt to finance their AI data center projects. They're very, very concerned because of Oracle's default risk spiking. The CDS, credit default swap of Oracle, has been keep going up and up. So in other words, market is pricing in the default risk of Oracle going up and continue to go up because their debt is keep growing and there's no slowing down. The private credit market is tightening. The liquidity in private credit market is drying. This will crush all the debt heavy companies going forward as more private lenders decide to walk away from debt heavy companies who they think they have high default risk. So this is very, very damaging for all these companies and then all the semiconductor companies. Why? Because those AI data center companies are the main buying power of all the semiconductors. If those AI neo cloud companies going down, no one is going to buy the semiconductors, the AI chips from Nvidia, AMD, Broadcom, and all these companies. They will be stopped buying and everything collapse. This is very, very significant and damaging to the entire AI play and the entire market because basically in the past 2 years, the AI companies are basically generating almost half of the entire US GDP. If these companies going down and they stop purchasing semiconductors, the AI chips, they stop building AI data centers, the GDP will collapse. Absolutely nightmare. So today I shorted IWM because it did give me a pump over 225 area. So I loaded puts around 251 and 252 area and it dumped all the way down. And I'm making a lot of money just on that trade. So IWM puts, I'm up over $20,000. Actually, I already trimmed a little bit. It's up over 45% right now. Um, and I shorted Tesla as well. Um, Not at the top, but still, it was a nice trade today. Tesla was obviously went a little crazy the last week or so, and today it's finally showing some weakness. So I decided to short right around this area. So it's breaking down of 480, which is I believe the key area, and it's continued to break down. and I'm up over 16% on my Tesla puts. Um, and I have a lot of XOXS shares, which is a 3x bearish semiconductor sectors. And I have the SQQQ sell puts. This is not put, this is sell puts. So I have minus 20 contract here. So this is basically just to collect premium if as long as SQQQ stays above $70. SQQQ is 3x bearish QQQ. So I am basically bullish on SQQQ by shorting QQQ. You can think of it like that. So I have a lot of various strategies. The only long position I have is Netflix. I'm not too concerned about it right now because it has long expiration date. It's up a little bit today, but I think it's going to continue to recover because of the Warner Brother acquisition deal. I, regardless it's going through or not, I think it's going to be good for Netflix in the long term. If it's if Warner Brother deal did not go through, then no harm, no foul. Netflix goes back to the original trajectory, and even if they and then if they do acquire Warner Brother, I think it's even better because they acquired a tremendous asset, tremendous IP from Warner Brother, and I think that's going to increase Netflix pricing power in the streaming industry. So I am a long-term bull on Netflix, and I want to talk about a few other things regarding NeoClouds. Um, so Oracle released earning last week. Um, the primary concern is their debt. They have over 100 billion plus in debt. And the major deal with OpenAI is another concern because OpenAI is a company that does not generate enough revenue or profit to be able to fulfill their orders, even though Oracle showing, I don't know, 300 billion in backlog, but those backlog may be nothing if OpenAI cannot pay the money, which is a pretty significant risk given they're building the data center for OpenAI. And if OpenAI cannot even pay those money, then Oracle is basically left holding the bag for OpenAI and get dumped really hard. And another very important earnings from Broadcom, AVGO. Um, they had a pretty good earning, but market still had concern over their margin potentially going down because of their product mix, and also they have signaled the the bottleneck in their supply because market is anticipating they're already running at full capacity. Also, the bottleneck from Taiwan Semiconductors (TSM) is also running at full capacities. Although they are already building new plants in Arizona and in Japan, but still, uh, the supply bottleneck is very real, which will limit the growth of all the AI chip companies. So when the smart money see the ceiling of all these AI chip companies, and then also at the same time seeing the major risk in all these companies, they decide to walk away. I think that's my interpretation right now for the market, especially for all the AI data center plays. Regarding the Micron Technology earning today, I think it will most likely get a very similar result like uh, Broadcom because simply because it had went up so much this year. Um, Micron has returned over 200% this year to date, and um, I think they're overdue for a pullback. I think they can easily retest $200 range. Now it's trading at 225. It has a long way to go. And if $200 can't hold, the next stop could be 180 or even 160. So, and this will also drag down the entire semiconductor sectors and also drag down the QQQs, all the related tech companies. I don't know when everything will bottom. Um, I will keep you posted if I see the bottom coming, and I'll when I see that coming, and I will close my hedge and I will close my shorts and I will turn bullish again. So, um, please come join my Discord channel. So this is the value of my Discord. I send out alerts to everyone regarding my trades, regarding my live market analysis. I'm giving you the the reasoning behind the trades. I'm giving you my thesis and analysis. I'm telling you how to make trades, your risk rewards, the fundamentals, the technicals. This I think this is a very good resource for you if you really want to figure out how to compound your account and fast track your trading career. Just want to show you my PNL. So this is my PNL of all time, up 3,600%. So I basically more than 36x my account since March 25, 2024. In less than 2 years, I've went 36x my account. So this is the power of compounding. When you eliminate risk and you can compound on the way up, this is the result. I can show you exactly how I do this. And of course, I can be wrong at times. I can have big pullbacks at times, but I know how to make it back. I know how to compound on the way up. And then at the same time, to minimize my risk when other people's account is pulling back and my account is keep going up. And this is my year to date. So my year to date is up 1,300%. So this is 3 months. 3 months, I'm up 200%. This is 1 month. 1 month, I'm up 30%. And today was the big day. I'm up 7% today. This is what I do, and I can show you how I do it. So that's all for today. Thank you, and I will see you next time. Bye.